Hello, Cameron here. I was just going to make a video about HPQ, as they just got bought up by Warren Buffett. Apologies if I'm slurring a bit. I've got my retainers in. But yeah, let's get right into it. So HPQ is the company which makes the printers and computers, that sort of thing. And then obviously Berkshire Hathaway just got a share in them, and as you can see, it jumped absolutely massively, which you'd expect. I think it's actually called like the Buffett effect or something. But if I'm being honest, I think it's just what happens when high-profile investors buy things. Like Kathy Wood, when she does it, it tends to happen as well. Um, but yeah, I thought it'd be quite a good video to make because I think a lot of the reason he's bought this company is because of the cash side of it, which isn't something that I know a lot about in general. So I thought it'd be good to sort of talk about it, and I could learn a bit on the side as well. Um, but yeah, so if we have a look, I'm also going to be using a new website called Stock Unlock to sort of talk through. I thought it was quite good. It's got loads of different metrics on there. So if you'll have a look, dividends, you can see the dividends per share over the last year have increased by 15%, which is obviously very, very good. I think it's got scores for these, so 5 out of 5 is actually perfect. Again, sorry if I'm slurring my words, it's my retainers. But yeah, if we take it back 5 years, it's actually been increasing like a cumulative aggregate rate of 10.5%, which is again amazing as well. And I'll get more into the sort of cash flow a little bit later once I talk about a few of these. Yeah, price to earnings ratio is lower, 30% lower than the 5-year average. Again, really, really good. It's one of the things that I like to look for. It's one of the simpler things when I look for before investing in something. And same with the price of free cash flow is amazing, which that's basically it's just their price for the amount of cash they're generating. So that's really good. Similar story with growth. They're doing absolutely amazing. You can see the earnings per share has increased 138%. The free cash flow has increased by 78%, which is both just outrageous, really. I wanted to talk more a little about. I'll touch on the book value a bit later as well, because I think that's a bit ridiculous. Not ridiculous, but it's something I think he's not overlooked. But he's sort of thought the cash flow situation is so good that he's not looking too much into the book rating. But yeah, so the earnings, so the growth figures and the dividends figures are absolutely incredible. So if we look a bit further into this, we can see a bit more why, and it's basically all to do with cash. So you can see its free cash flow is 6.3 billion, and as you can see, it's quite volatile. So it's gone from it's going all over the place. But even then, the last year it's generated 6.3 billion, which is absolutely huge, which is very, very good. But something that I did want to touch on was what they're doing with the cash. So you can see that their net common stock issued is 6.3 billion, which is, I think it's very similar to the amount of cash they've actually generated. So essentially what they seem to be doing is taking the cash they're generating and taking it all into share buybacks. You can see that by the fact that their net shares outstanding had decreased by 15%, which is obviously very, very good, but it shows you a bit more about what they're doing with the cash. And then if we take that as well, there was something else I wanted to touch on, which was their liabilities, which I don't think is on this page. But yeah, so their liabilities have been increasing a lot as well recently, and their assets, basically they've got a negative book ratio essentially. So their liabilities are increasing, and their liabilities are already greater than their assets, which is just something to be aware of. I know obviously Warren Buffett cares a lot about the amount of cash a company generates. I think it was him that said like the value of a company to him is the amount of cash it generates from now until the end of time. Which, I mean, obviously this company is generating loads of cash, which is really what he's interested in. But there is obviously more liabilities than assets. Is never great. But yeah, it seems to be that plus the leveraging it up a bit. Then Yeah, I think the last point I wanted to touch on was their percentage return to shareholders, which I don't think is on here, but it's essentially this metric that Stock and Lock came up with. Saw it on a different page, but it's their total dividends plus their share repurchases divided by their market cap. And that's supposed to just see how much cash they're generating and how much, well, it's basically just the return to shareholders, how much cash is going back to shareholders. And theirs is 19%, which is really, really, really high. And again, I really think that fits in a lot with how Warren Buffett invests. I think I saw that was the main reason I wanted to touch on this. But I think a month or two ago, when it was stock was around $30, because yeah, it did dip yeah, a couple of months back. So it did dip and has been dipping to around 30. I saw a bunch of articles about how people thought it was undervalued anyway. I mean, in my studies, I've also been looking at how HP's was almost like an example failure about how they keep trying to diverge away from printers, but they always kept coming back to printers. But apparently, they're doing really, really well. So yeah, that was just a little video touching on that company I thought was quite interesting. And sort of, I need to learn a bit more about cash in general. I think regarding how people value companies, I think this was a nice little way to touch on it and learn more about it. But yeah, thank you very much for listening, and apologies again for the slurring. It'll be gone.